or even like a guideline that we were unaware of. Jim and I were talking about one yesterday, which I can share here in a minute, but just, little things that we can do or products that we could utilize to save deals. So, we do these every once in a while, and it's pretty interesting because usually you'll walk away with something that you didn't know before you came on the call. So, from a product standpoint, does anybody have anything that they've recently closed that's sort of helped brought a deal in, or can you think of anything that helped you originate a deal off the top of your head? Otherwise, I'll start. You guys can think about it. So, well, Jim and I were talking about a client, and we were talking about border income with a Fannie loan, right, Jim? So this was, and I can share the guidelines on these. It's just a one page for Fannie on it. But we had a scenario where customer was renting, brother was living in the apartment. They were living together essentially, right? And the question was, hey, if he's paying rent of X amount of dollars, can you use any of those funds or any of that income to then offset the next mortgage payment that they're buying? And we've heard about this stuff before, like border income. So this was, Jim sent me this yesterday. So Home Ready, so the ADU income. So there's really two scenarios. Oops, sorry. So this was a scenario with an accessory unit, right? And I know, like in Nashville, I think that's pretty big. There's a fair amount of the ADUs like in Georgia, but you can use income to help qualify borrowers on that. And I can send this out to everybody on the line.
Brendan just sent a chat. I think he's in the meeting, but also in the chat. He said you can use the rent to offset if you set up a. Oh, he's joking. Okay, never mind.
Sorry, I think I have COVID. I think I have COVID.
Yeah, never mind.
Leadership lab.
Just trying to be a moderator.
Yeah, so they didn't want you here.
Mike, this is on Home Ready though. Just let's be clear on that.
Yes, that's right. Good point. Only on Home Ready. So you got certain qualifications. You have certain, you got to make sure that it qualifies for Home Ready. So anyway, we just looked at that yesterday. I had a scenario that popped up. I'll send this out to everybody. Just take a look at it. But yeah, you got to make sure that fits the Home Ready box, which is not, it's not massive, right? But you might be able to get something in there.
So Mike, that looks like you have to have a 12-month history, and you got to show canceled checks.
So I think it's at least, I think they said at least 10 months history, show canceled checks. You have to approve it, right?
And then 70%.
Let's look at this. Let's look at the scenario too. So roommate living with her for the last 12 months. She's to validate. So she, like in this scenario, it was $375 a month. She could only verify in this case 10 of 12 months, right? So quarter income was $37.50 divided by the 10 months. So, I mean, again, it's just something that we looked at yesterday. It's an extra few $100 a month of income. I'd forgotten about it, so.
Nice. Hey, Michael, curious, what is the Home Ready limit in Atlanta?
Home Ready limit in Atlanta. We looked at one yesterday, and I think it was like,
I think 68,000.
Yeah, it was right around 70 grand. Yeah.
Gotcha.
It's probably, I think it's higher in Nashville, maybe, right?
I think we're closer to 72, 75, somewhere in there.
Yeah. always interesting that Nashville's got a higher cost of living than Atlanta.
Oh,
But
just kidding. East Cobb is 82,320.
oh, is it?
Mm-hmm.
Okay, yeah, I think we looked at Douglas County yesterday for this deal.
Yeah.
So I mean, just something to think about. A lot of people, especially, I've just run into a lot of like your first time home buyers that are renting. A lot of people have roommates, right? Or hey, look, I'm going to buy this house. I'm going to bring, my girlfriend with me. She's been paying me X amount of dollars. I mean, you never know. Just something to think about.
Hey, Michael, are you aware, and I need to read up on this, but I think FHA just changed their guidelines to recognize income from ADUs.
ADUs.
I don't know if it's a similar situation to this where you have to prove history, or if simply like you're buying a property with an ADU. I don't know exactly what that looks like, but I know this was like maybe within the last 120 days, I saw something
Yeah.
on FHA as well. There's a possibility of using income from an ADU.
I don't know. Yeah, I'm not sure about that, Andy. I don't know if Sam or Jim, you have any, I don't know if you've looked into that. But worth looking at. And I also think, I think also on the multifamily, you guys have seen the blurbs about the conventional guideline change on multifamily, where the down payment is, I haven't priced it in OB, but I think it's live. Maybe it's either live today or Monday, according to Kevin, where you can get in for, I believe, 5% down on a multifamily conventional. Whereas before, I think it was at least 15% down on a multifamily conventional, correct? So that's changed.
Correct.
Yeah.
Owner-occupied was 15% down.
Yeah. So
But
that
it's
was
just-
always,
It's
Go
just
ahead.
Fannie, not Freddie. So if you're doing like a 1-year tax return with Freddie, no go on the 5%. Just heads up.
have you, and I think pricing may be live now. Have you priced one at all or no?
I haven't. I have one right now, but he's going Freddie because he's using a 1-year tax return for business. So he's doing 15% down.
Got it.
So
I haven't
you
priced it.
actually
for the
have a
5%.
4-unit Gloricel?
What's that?
You actually have a 4-unit purchase.
No, 2-unit.
Okay. I was going to say, like, in the history of shiny lures, multi-unit dwellings are the biggest bogus shiny lure. I mean, do you guys really have, how many, I've been doing this 28 years. I can tell you I've financed 2 4 units, 2, and it was for the same guy.
Yeah.
And he was a bit of a commercial shark, and he claimed he was going to live in one. He didn't have a house. And then, oh, by the way, the one next door, his mom was going to live in. We did 2 FHA loans. She quit claimed it to him later on, and it was in Washington, D.C., and he worked in the commercial real estate business. So those are the only 2 quadplexes I've ever done. I don't think I've ever done a triplex, and I've probably done less than 10 duplexes in my entire career. So when I tell you guys, like, advertising to realtors, 5% down, quadplex for Fannie, it's like, it's a ghost in the machine. It's like nothing. I could almost tell you right now, there's probably less than 5 of these loans that have closed in the United States. Think of this. You're a first-time home buyer and you want to buy a quadplex and live in it and then manage 3 renters with 5% down and no reserves. Like, that's a recipe for disaster.
I've done 3 duplexes this year, and actually 2 of the 3 were first-time home buyers, and they all went FHA, of course, because you could do it at 3.5% down. So I don't think I would necessarily. I don't know if it's a marketing thing, although Mutual is marketing it on social. I'm just saying. So, and the way I learned about it, I'll be honest with you, was through Instagram, and it was through Mutual's post last week.
Well,
so I guess the thing is, you better know about it, because if your realtor asks you, you have to have an answer.
So I want to also chime in, because you did, Mike. Brendan, here in Chicago, it's a very viable and very big thing, because we have a ton of ethnic communities that will be the first one in to buy and rent out the other three.
Okay.
This is definitely, we call them four flats. What they look like for us, it might be a stacked duplex with three, 2 units on the top. So for us, it's big, but I think the point is, it's a talking
Yeah.
point with agents.
I'm more, this is the behind the scenes, like, will we
Yeah.
ever, and what's that quad thing flat that cost in Chicago? Give me the numbers.
I
Million
mean,
bucks, million
in the
two?
right areas for sure, but even
Yeah,
in like
so-
very medium, it'd be 450, half a mil.
Yeah, I just look up and go, when I've owned properties and know the amount of issues with well-built properties, when I look at a quadplex that you're buying used from some investor who probably hasn't taken good care of it, Michael, check in with your 3 duplex FHA buyers and see how it's going.
Yeah.
Because ultimately, we can make money. Like DSCR loans, and we'll get into more product. We can make money selling product, but I'm always very cautious when I hear first-time home buyer, duplex, triplex, quadplex. And especially with low down and very little reserves, to me, that's a loan that will fail at some point, or they will get their ass handed to them. That's just my opinion. Until someone shows me all these success stories, I'm going to keep my opinion to myself.
I'm not disagreeing, Brendan. I'm just telling you, in Chicago, it's a valid and useful product.
Got it. And market it and see what happens.
Yes.
Yep. Product wise. So anybody else this is a product call. So anybody else have anything that is, I don't know, saved a deal, weren't aware of? I mean, this is
I've
when
got
we,
a,
I
I've
knew
got my
Glorcel was
1.5
going to have something. Let's hear it.
I'm doing a 1.5 million VA construction to perm right now. That's fun. Very interesting because there's no limit on VA loans, so they can do a $2 million house with no down payment. It's kind of
Oh my
wild.
God. That's awesome.
Yeah.
Yeah.
So this is a 1.5. Learning a lot along the way. Like VA doesn't count the land.
Yeah, I was going to ask, for the benefit of everybody on the call, like, what are 1 or 2 things that you learned going through it so that we could all spare ourselves if we ever run across one?
Get the builder registered first and foremost. Builders just work on their own time and in their own pace, and if they're not registered, it holds up the whole process. And the builder registration is a lot of docs. So
yeah,
it's almost like they're qualifying for a loan.
Yeah.
I mean, if they're super organized and they have an admin team, great. But if you're getting, one-off builder, it's this one's been fun, but we're getting it.
And your builder was, I know this deal, I know the borrowers, and your deal was the builder's a country boy. Like Larry calls him for docs. Well, I'm hunting deer right now, but when I get back to the office next week, I'll look for that document. I mean, this is literally, he's hunting. He's always hunting. Like, I don't know what he's doing. He doesn't build, but yeah. And they don't give you credit for the land that you purchase. So it's just interesting. So,
but if they do bring, so on their, get the builder registered. There's a separate VA registration, but it's very minor compared to everything else. It's like 2 pages. So if they're not, maybe if they're registered with the bank, but not not registered with the VA, that process is very simple. The main registration takes much more time. And then the other thing was, if they do have a small down payment, I think it's with 5% down, it reduces the funding fee.
Yeah.
Significantly for VA. So, they got like a big break in that. Of course, they were counting the land as their 5%, and we're working on through the deal. But there is no loan limit, and it's no down payment for a construction to perm.
Yeah.
It's kind of wild.
I think we limit to 2 million, right, maybe?
I think we do. Yes. I mean, hopefully they're not building a $5 million
I've
state,
never seen it. I've never had that problem, but I'm just saying.
Yeah, I haven't run into that problem yet. So
That's our limit, Mike. Yes.
2 mil. Yeah.
So our limit is 2 million, but
On the VA,
and there's not very many lenders that do it.
That's
How do you
correct.
price it? when you lock it?
So it locks at 1 point above for the 12 months. So theirs priced pretty decently. It was 6.75 was their rate.
Jeez.
We locked it at 7.75, so it's locked for 12 months during the build. So once it closes, they have a 12-month build. It's locked 1 point above. Once it converts, after the build is completed in 12 months and it converts to a fully amortized loan, they will float them down to market, unless rates are higher than they are where they are. But otherwise, they float down. It's really, I'm learning obviously through this process, but it's really an amazing product. Like, it's kind of unbelievable.
So if I may, guys, it's an incredible product. We just closed one, I think, for 1.3. Gloracell, you're right. It fully amortizes inside of 360, meaning if it took 9 months to build, then the remaining term is 351, and there's a balance recalculation. But why the product is huge, because you're helping inventory, and it's really a business plan in a box for a smaller builder who can only have so many builds going at a certain amount of time. You can bring them a builder, you can bring them a buyer who's approved to buy, and they don't have to be they don't have to do the financing. The buyer themselves is bringing the finance. This product is incredible. It's worth 15 minutes of investigation, because I think it'll lead you to want to look at it more.
Yeah, the point is that small to medium builder that doesn't want to take the risk or can't. Well, a lot of these builders, they can't get a spec line to build a home, right? But they need to make money. So if you can, you got a buyer that's funding the deal, they love that.
And there's what Gloracell said, which is very important. Not a lot of lenders can do this. Why? Because there is a ton of interest rate risk. That loan is locked at 7.75. If rates go to 9.25, we're delivering that at 7.75, and we own that loan from the minute it closes, not from the minute construction is done. It's from the minute it closes. So not a lot of lenders will take the risk. And last but not least, Gloracell, I know you know this, there's no second appraisal that needs to be done. It's just a certificate of completion. There's no income or job re-verification, and you don't pull credit again, guys. It's a great product.
Yeah.
Question, do the fully amortized payments start at closing, or is it an interest only and then the fully am starts after?
There's actually no payments during construction.
Right. Aren't they financed?
Yeah.
Yeah, that's
So,
the other thing. Yeah.
yeah, I think they have like 75 grand in payments and whatnot being financed. So the contract, right, Gloracell's kind of
Yeah.
different. Like we have to pad it quite a bit for all that stuff.
Yeah. So on a typical construction to perm, it's like a cost plus contract. This is a fixed cost. So you have to make sure that the contract states that correctly. Essentially, because it's VA, the buyers do not pay interest. It's not an interest only. The VA doesn't allow the borrower to pay the interest. So really technically the builder has to pay it. So what they do is they just build it into the cost, to cover that. So you just have to make sure that the contract sets the fixed cost. The upside of that is, like what Sam was saying, because it's a fixed cost, if they finish that build in 12 months, it's still fixed for the amount they, agreed to. So they end up, profiting. Now, if they take longer, then, reverse. But that's an incentive for them to finish it quickly because the cost is fixed. And if they finish it early, they just get all the better.
Mm.
Do you have a lot of builders that do the fixed cost? My custom builders are always cost plus.
They're all cost plus. VA is the exception because the VA does not allow the buyer to do a cost plus. It's not allowed by the VA. Mm-hmm. So this is the exception. Any other construction to perm, it's going to be a cost plus.
And do they have to finish in 12 months?
Yes.
Okay.
So that builder's got to finish in 12 months on that Gloracell?
Yeah. If they take longer, they just it's a fixed cost. So if they take longer, they're just losing money.
Yeah, they're losing money.
Yeah.
What
Yeah,
about
they can take longer, but they're just going to lose money because they're not, the cost is fixed for 12 months.
Yeah. Just worried about deer season.
Oh, this is such a great call.
So but clarifying on the FHA or conventional construction, they allow a cost plus contract? I thought they all had to be fixed.
No, I believe it's cost plus because the buyer pays the interest. They do the interest only and throughout the build, correct, Sam?
Gloricel,
I
I
could be
was
wrong.
distracted by a
Oh.
text that was just sent to me accusing me of being a burly makeup salesman at a department store. Could you repeat the question?
I wonder who sent that. Yeah, in Gloricel, what I meant was like the contract between the builder and the buyer,
Oh, got it. Whether,
fixed. And Jesse, did you mean that?
Yeah.
The builder's contract? I believe, and I could be wrong, but I believe all the contracts have to be fixed contracts. They cannot be cost plus. But they
Right.
convert those. They can
Yeah.
convert those. Your
Right.
builders can.
When you guys see this and you get into construction deals, I'd love for us to just dissect when a contract, because it does seem on the ones that we've been doing initially, the contract was a cost plus because the builder just doesn't want to give, hey, it's a $500,000 build. They're charging 20% cost. So they're going to make $100,000, right? Now, so the total cost of the build is $600,000 when you're estimating it. What we want is that converted into a fixed cost so that the builder would then say, hey, I'm going to build it for $100,000 and here's the price at 600,000. And that's it. Like the language changes. So have any of you guys experienced this where the borrower or the builder throws a hissy fit because they're now concerned about liability? Or how do we deal with that?
I think they just build in a bigger reserve, contingency reserve, I think. We had one, we closed maybe 5 or 6 months ago, and they came over cost plus, and I think it had to be changed. And they just built in enough juice for overruns.
Well, and that's what just happened with us. The builder didn't seem to care. It was exactly a $500,000 build, and we built in 50,000, 10% loan reserve.
Yeah.
Which is kind of messing now with their total cash needed in the deal because the person has quite a bit of retirement stuff that's not liquid, and it's been a difficult deal. She owns the land outright, so she didn't want to come out of pocket, but now she's having to.
Yeah.
So
and the other thing is they follow AUS findings. So for this particular borrower, they're not selling their home until after their build because where are they going to live, right? So they have like this $3,500 current mortgage that they had to get qualified with to do the new construction. So the back end DTI was like 62, but we got an approved eligible, so it's fine. Yeah, as long as the AUS gives you approved eligible. Now they have a ton of reserves and very high credit, so there's a lot of compensating factors. But they didn't have to sell their current home to do it.
as much as these loans are called mortgages, the details that we're talking about are immense. And as long as no one commits to any client, like I have one right now that that I just got this week from a financial planner. He owns a house outright for $1.5 million. He just bought dirt for $350,000. He wants to build. He says his contract to build will be $1.2 million with the pool. And he's got all these investments at Northwestern and he doesn't want to touch them. And he thinks the market time on his home will take about a year because he's pricing it pretty high, his home to sell. So I told him, hey, I'm going to get you an estimate by week's end, which Andy, you, me, we'll get everybody together. Benton, you can help. Bottom line is here's where we're limited. And I think he's got cash, but we don't really have a jumbo construction loan. Right. So
not in-house.
Flagstar.
Flagstar.
Yeah. So what's the new conforming jumbo limit, assuming this doesn't close until January? It's 890 right now. What's it going to?
Gee, it's 890 in Nashville?
Yeah.
Jeez. I think in Atlanta, it went up like 25 grand, I think.
Mike, our FHA limit in Nashville is 890 as well, or 896.
God, are you
That's
serious?
insane. I think it goes up to 750.
Jeez.
Yeah, I mean, guys, when we go out and get sandwiches here, they're $26. A coffee's $11. We love it up here. It's just so expensive.
Yeah. It's the one. It's the 1% bill.
Well, you know this, Michael. When Doug Bateman used to train with us
Mhm.
in Dallas, he was like, "Yeah, so I'm maxing out FHAs at 255," and I looked down and whatever year it was, I said, "Doug, do you want to know our FHA loan limit in Nashville?" He was like, "What is it?" I was like, 425. He was like, "Are you insane? Like you should be selling FHA." So he's just so you know, he was the #1 FHA originator in the state of Texas last year.
Wow.
We should
Crazy.
have him guest on one of these calls and just throw up on us.
Yeah, no, that'd be good.
Yeah, he's always he knows so much more about FHA than any human out there.
Yeah.
But so back to this guy, if our conforming jumbo limit, I'm just going to give him a loan amount of 900, just guessing this is going to go up a little bit,
Yeah.
and then just go through. With these, it's just like Gloricel said, you add a percent to 1.25%. For conventional, I think it's 1.25% on top of the rate sheet,
Mhm.
and then bake in all the construction fees, like the monitoring fees and the setup fees, which seem to be about $3,000. Does that sound accurate? With like withdraw,
Yeah.
Cover.
Ballpark. Yeah.
yeah, $3,000 to $4,000. So I do think, the better we get at quoting these and kind of going through the estimates, understanding the builder approval, understanding the nuances of what can be financed and what can't. Gloricel sounds like she has the magical person. They've got reserves, they got a VA, it's a $1.5 million loan. And any curveball that comes up, Gloricel, it sounds like you're managing it.
Well, I'm pretending that I am. Fake it till you make it.
Yeah, for sure. Well, and I tell everyone when I first got in the business, I was at Signet Bank and a client called and they sent it through to me and his name was Bill Mountjoy. True person. Bill and his wife, they got divorced, but he's like, "Hey man, I need a construction loan." And I was like, "All right." I remember like putting him on hold, like yelling down the hallway, "Do we do construction loans?" And someone was like, "Yeah." He ends up being the head of IT for the AFL-CIO. And this was up in the DC area. And he bought some beautiful lot on the Potomac River, just south of Mount Vernon. He was like the nicest guy ever. Came in, like so patient. I didn't know anything, Gloricel. And it took us 90 days to figure out the loan. And then I remember he said, "Hey man, I'm going to go out on the lot and meet with the builder. Do you want to meet me down at the lot?" So we went down and, it was just one of those learning experiences, my first half year in the business, that you really, if I hadn't been there to answer the call in, somebody else would have gotten it. But the nuances of construction perm deals and how many different products we have, Sam's right, study them up, look into them because, builders need this right now. Clients need this. It seems like lot prices are dropping a little bit. And that individuals who maybe like this guy that called me that have a ton of equity in their home, maybe they can afford a construction loan and find a builder that does it on a fixed cost because builders don't have as much business right now. So that's my 2 cents.
Cool. Nice. Thanks for that, Gloricel.
Yeah.
Super real helpful. Anybody else on the call?
Hey, Mike,
Anyone
I was gonna just pitch in here real quick. So I'm doing my first 203K FHA renovation loan. It's with Planet Home Lending.
Yeah.
I think it's gonna be one of the first that we close with Moon. Because Planet Home, I believe, got onboarded this year at some point. But very similar to what Gloricel was saying, the builder approval, essentially, the toolkit that they fill out, which is a pretty beefy packet. That's really the sticking point. It's just getting the contractor to fill everything out, send over proof of insurance, bond, the cost estimate. I mean, it's just been like one thing after another with this contractor trying to get everything together. But it's, it's very straightforward. It's about a $90,000 renovation on a $260 purchase price.
Okay.
Also, it's a VA foreclosure, so it's also a little bit, more a little bit more complex due to that. But it's moving along. But it's going to end up being a pretty good deal for clients.
How far along is it? Have they chosen the HUD consultant yet?
Yep. So we have a consultant. That was like the first thing I did when they even considered doing 203K on this property that they ended up getting, is I started calling every single HUD consultant that I saw that was located in Middle Tennessee.
Yeah.
And there was only like 3, no lie. And so I called and got the guy who we eventually hired, and he's been fantastic. It's really been the contractor, which has been the huge issue. But HUD consultant did the walkthrough with the contractor, the clients, and then they will always have some type of revision to the budget. So the HUD consultant will have to add or just put more detail into that cost estimate.
Yeah.
Because their big thing is that they want to make sure that the appraiser knows some of the specifics so that they know how to evaluate it correctly.
Right.
But you have to have that report and cost estimate nailed down before you can order the appraisal. So we literally just got to that point yesterday or 2 days ago where we finally got that report in. But it's been probably a 30 to 40 day process.
Oh,
getting
wow.
all this stuff together, just because everybody's been,
Because the HUD, so the HUD consultant really, they're doing a lot of communication. Obviously, she's communicating with the contractor, right? Because they're doing the write-up, the work review.
Yep.
Now, do they pay the HUD consultant up front, or does he get paid at closing?
The initial inspection that he does gets paid up front. I think ours was like $900. It's based on the renovation budget. And then all the other HUD consultant fees, which he is also the one who does the draw inspections during construction. So those fees are rolled in and escrowed. So the client has to be prepared to pay the HUD consultant fee out of pocket.
Yep.
And then the appraisal as well. Everything else can be included at closing. And then some of the fees, the construction fees, can actually get rolled into the loan as well. So it's not a ton. I think we are ending up rolling in maybe $1,500 to $2,000, but it helps because these clients don't have a ton of money. So we were trying to get their case to close as low as possible.
Yeah.
We have some stuff in the chat I want to go through. Jeffrey Orrell said, I just did a 203K as well. The gold at the end of the rainbow is that having the builder docs and toolkit saved into a file now gives you a head start for other 203K or rehabs in that area and allows you to move much faster on other deals.
Yeah.
And then that's the only thing in the chat.
I would recommend, if anybody has clients that are considering this, to, like, in pre-approval stage, as soon as they say, hey, we might want to buy this house and do a renovation project on it, their FHA, I would immediately say, who's the contractor? Give me their contact. I have to call them before you even go under contract on this house. Like, just get in front of it and then send them over the documentation as soon as possible, and like almost like in pre-contract stage, like start working on it, because
because you want to make sure, number one, they're willing to fill out the packet, and then they have a separate, don't they? Isn't there generic or a contract that they're required to use, like a format contract that we have or Planet has?
Well, there's pieces of the packet that are like, essentially like the contractor is attesting to follow certain policies that Planet Home dictates. So it's,
Yeah.
they're putting their name on it. They're signing on the dotted line when they're filling out the funds. And then the only other piece, I guess, is just once the cost estimate from the HUD consultant is dialed in, they sign that as well, and then that's what they're agreeing to.
Now, if the contractor was like attentive and you guys were like, you know, you were just firing on all cylinders, how long do you think it would take to get that right up? A couple weeks?
Oh man, a week.
Oh, okay.
Yeah, like our HUD consultant was fantastic. He was Johnny on the spot. So I mean, to schedule it, go out, do the walkthrough, do the revisions, and then have everybody sign it a week, you know, to 10 days max.
What kind of questions were you asking the HUD consultant? Or when you were when you were calling through them?
Yeah, up front, it was just, you know, what was their experience, obviously with the 2 or 3K loans, but you know, what's the scope of work that we can include in the budget? Yeah, you know, if we're electing to go with the standard 203K versus the limited, you know, what should we be looking at? I was under the impression that 203K loans, you couldn't do major structural repairs, which is not true. These clients are repairing their roof, and they're going to be probably repairing some foundational stuff too.
Yeah.
So questions like that, and then, you know, questions about the appraisal process. But the consultant really is like the person with all the knowledge, and he's really been helpful with dialing in, like, hey, when you talk to your client, this is what you tell them. Like, he was kind of coaching me through that too. But it was mainly like scope of work, timeline, you know, the fees. He laid out his fees, you know, super clearly. So all that was very straightforward, and then it was just translating it to the file and getting it set up correctly.
Got it. And I'm pretty sure that if it's it's a limited Streamline, I don't think we need a consultant for a Streamline through Planet, do we? You know?
Not sure.
I'll have to check on that.
Sure.
Quick question on 203K or Reno Express. Only one contractor estimate is needed?
Yeah, we only got one.
Thanks.
Let's see. Cool. That's helpful. Yeah, it'd be interesting to see how that goes, Andy. Thanks for sharing that. That's awesome. Cool. It's 12 after. I think we end it there. But that was good. Some good stuff. And Benton, you're gonna shoot the recording over to Amy.
To Amy Lurza.
Yeah.
Yeah.
Awesome. Cool. Well, listen, everybody, thanks for hopping on. Hope everybody has a great Thanksgiving.
Yeah.
And then we will not be on next Friday.
We will
At least
not.
I won't be.
I'll be in Puerto Rico.
All right. You guys have a
Happy
good break.
Thanksgiving.
Enjoy. Thanks for sharing.
See you, everybody.